unlocking venture capital for the space economy, investment, scale, and market readiness. As India's space sector continues to expand, access to capital and investment readiness will play a defining role in shaping future growth. This session will examine how investors are evaluating space businesses across upstream and downstream segments, what makes space ventures bankable, and how financing models are evolving beyond traditional venture capital. This discussion will also explore regulatory clarity, demand visibility, and pathways to unlock institutional and global capital for sustained growth. To chair this important discussion, it's my privilege to invite on stage AVM Dhananjay Khot, retired Director, Strategy and Policy in Space. We also heartily welcome our moderator for the session, Mr. Sreeram Ananthasayanam, Partner Technology and Transformation, Deloitte, India, and also welcome our distinguished speakers and panelists for the session, Mr. Raghu Das, Partner E2MC Venture and Founder, Almagest and Clustersat, Mr. Sameer Karwal, Co-Founder, Sanhit Ventures, Commander Navneet Kaushik, Founder, Jamwant Ventures, Mr. Sethia, Managing Partner, Kavachh, Mr. Manish Gupta, General Partner, GrowX Venture, and Mr. Chetan Mehta, Founding Partner, Om Ventures. We request all the panelists, chair, and our esteemed moderator to kindly come on stage and be seated. We are esteemedly honored to have you with us today. I now kindly hand over the stage to our esteemed panelists, chair, and moderator for the session. Thank you.
A very good morning to everybody here. At the outset, on behalf of myself, the panel, and the moderator, a big thanks to SIA for the opportunity to speak to all of you and share perspectives. I was just reflecting on what I'm doing this morning, and it's rather strange. I spent a lifetime being a plane driver, and then dabbled in strategy and stuff. And I could barely keep track of my income and expenditure, as a proud Air Force officer ordinarily does. And here I am talking venture capital for the space sector and chairing a panel with the people who do this as practitioners. Okay, so life leads you to strange pathways, and here I am with everybody, and so wonderful to be with the experts in the domain. Before we start, I'd just like to share a few perspectives on what I have learned and what I think gives a little context to what we're going to talk about here. It's clear to this audience, I think, that space is a capital guzzler. Of all possible domains of commercial activity, I doubt if there is anyone which matches space when it comes to how much capital it needs to succeed. If we just look at what's happened to the space economy over the last few years, it's kind of mind-boggling. The space economy currently is of the order of $470 to $480 billion. That's the estimate. Estimates vary. About 77% of this is driven by commercial markets now. The story was very different just about 15 years ago. Private capital accounts for the majority of this movement that has happened. And the CAGR estimated for the growth of the space economy is about 11%, which is upgraded from about 8% estimation a few years ago, just 4 years or 5 years ago. Now, this is despite COVID. This is despite the black swan events that have overtaken us in the last 4 to 5 years. There's been Ukraine, there's Gaza, there's been Hormuz, all of that. So through all of those events, the space economy has still sustained a trajectory which is not merely positive, but has upgraded from estimates of about 5 years ago. I think that says something about where we are headed. In the last 5 years, the world has invested about $28 billion in the space sector, globally. In the last 10 years, the total private sector spending is close to about 48 billion, 28 billion in the last 5 years. So in terms of growth of capital into the space sector, that's about a 21% annual increase. That's remarkable. Just the investor base, the number of new investors coming into space. From 2020, it was about 278 distinct, unique investors. By 2022, it was 558. That's twice, more than twice. So that's the kind of interest the space sector is generating in the investor community. In India itself, we saw a dip in 2024. We just had about 86 million kind of an input from the private sector, which was less than the previous year, which was boosted by the space reforms and the Indian space policy. That was 130 million. The very next fiscal, that is 2025, we went from this 86 odd to over 190 million. And this year, we estimate will cross 250 to 300. So that's pretty good. Just last week in the In-Space Industry Connect, we had Mr. Rajan Anandan, managing partner of Peak 15, tell us that the investor community is undergoing a shift in the mental models and in the mindsets and is warming up to the idea of patient capital and so on and so forth. So there is a shift that's happening around us. So that all this is good. So message number one, or the inference number one, is things are looking up globally as well as in India. Last year, the world spent 28 billion. India spent 190 million. That's not good. Last year, totally, India spent about 1.1 lakh crore rupees on commercial and on the startups and infusion of funds into India. We spent less than 2,000 crores. 1.1 lakh, 2,000. Just about 1.8% of our investments into capital markets, not capital markets, into the, into the entire startup and industrial sector. 1.8% is in space. So the sobering thought against the previous call is that the Indian space sector remains grossly undercapitalized. So it's not adequate. Number three, one can argue that capital is capital, money is money, right? It's like water. But like water could be coming to you from overhead tanks or from lakes or from canals or from, something else. Capital also tends to be structurally confined and locked in different pockets, and it doesn't flow in the same ways. So we have the government cachet, the public funds, and that is being infused in a big way. We have private capital coming from VCs and PEs and family offices, high net worth individuals, all of those. And then we have the banks and the NBFCs. And each one of them pulls out money in different ways, along different pathways, along different constraints. And how do we unlock this? I think that's what this panel needs to really, talk to us about and maybe suggest something. Even today, the big tickets are still coming from abroad. There's no dearth of seed money in the Indian markets. But when it comes to scaling up, when it comes to growth, somehow we're still looking to the foreign sovereign funds or other institutional investors for the big tickets. So it's like raising the baby from the cradle, to adulthood, and then somebody else comes and takes our bride away. I think we need to think about that. And the Indian, investors need to probably grow into this role and take that on. So those are my opening thoughts to the thing. I won't take any more time, and I'll hand you over to our moderator for the day. Sreeram, all yours.
Thank you, Air Vice Marshal Khot, and good morning, everybody. And today's topic we have is unlocking venture capital for the space economy, investment scale and market readiness. So I was talking to one of the practitioners in the venture capital area just before this meeting, and I was told that all VCs are in the business of optimism, right? And there couldn't have been a better statement to validate that when Air Marshal Khot said that a plane driver is now chairing a session on space tech and deep tech. Having said that, we are sitting in very interesting times, and we are sitting in times where we see some companies going at $2.5 trillion valuation. The world is shaken by what is the art of the possible, but none of that has happened overnight, happened through decades of research, investment, market outreach, so on and so forth. And today we have a distinguished set of panelists, all of them practitioners in this particular area. And given we have only 35 minutes, the way I would like to run this session is by asking some opening questions which you may want to pick up and answer. And I'd request you to, let's make this interesting for the audience and for ourselves as well. The more we discuss, the better. So my first question, opening question is to say, how do you bet on a horse, right? What do you do? Because most of these propositions that come, sometimes what people say, they're selling snake oil, right? And some people come and say, this is just not possible. There is no market economics to substantiate any of these things. What goes in your mind? How do you bet on some of these horses? So I'll start with Raghu, who's on my right, and then.
Okay. I think there is no one way of finding out where to invest and how to invest. It depends on individual. For me, I think the founder has conviction or not. That is the first thing. We have to have that, and the technology feasibility also another thing you have to look at it. I think, but this comes down to founder, and the founder has to basically be convinced to a VC that it sees the dollar. I think because we want to basically get a return, so they have to basically promise to prove. I think what they have to basically show us.
I'll go to the right, with Sameer. You said, Raghu, that it's about the founder and the path to money, right? That's understandable, which is what almost all kind of investors do. But space being space, and space being rocket science, and space, many times when I talk to space practitioners, half the terminology goes above head, right? Now, how do you really, and one cannot, it's so multidisciplinary. One cannot really be an expert across the value chain of space. One is a launch expert, one is a satellite expert, other is a detector expert, third could be a ground station expert. Given the complexity and multidisciplinary nature, right, apart from the founder and the money, what is it that you look for when you are evaluating a space startup? Sameer?
So, thank you for putting that across. And you're very right, we are not rocket scientists, right? And rocket science is a very complex area. So I would like to put this into a financial model or a common metric, which would be, let's say, what's the demand visibility, right? Apart from all these fancy technologies and rocketry, what is the end use case and how does it actually translate into numbers in terms of demand visibility? Who's going to be the off-taker? What is going to be the numbers when it comes to demand, and how is that going to translate into revenue, right? So that off-taker visibility and the demand in terms of numbers which translates to revenue is going to be an extremely important aspect for me, right? And that's what I clearly look at. Of course, cash flows, assets, other metrics are of course there, and of course there are areas where mission failures of course are common, so you have to look at the probability of risk also and account for all that. But yes, if I was to pick up one key parameter, very clearly I would say the demand visibility. What is the off-taker and how does it translate to numbers? Very important.
No, thanks Sameer for that. We heard money, we heard the founder, conviction, we understood the demand. But I have another question, if I may add on to that demand aspect, right? Many of the space startups, if you look at it, are venturing into areas which was non-existent. For example, who had heard about space situational awareness? Who had heard about asteroid mining, right? Who had heard about lunar economy? And who had heard about things like new ways of propulsion, etc. Even some folks in ISRO, are not into, for various reasons, into those. How do you then ascertain demand? How do you peg to it? What goes in your mind when you're evaluating those kind of companies? Manish, if you could.
So, I'll keep my answers broader to deep tech and not necessarily to space tech. Because I'm not a space tech investor only. We have done robotics, semiconductor, genomics, defense, everything across the board. We have done 3 space tech, but not too many. I think with most deep tech and including space tech, we at least personally we choose to stay away from very sciencey, very exotic deep tech. With our, let's say, we invested in a company called Pixel and a company called Bellatrix and now a company called YouLook. We knew with our investment, our first check and one more round that we could support, they had a chance of going to space, maybe a couple of chances of going to space. We probably didn't need a few $100 million for them to, we didn't know where that few $100 million will come from. So we said, we'll choose to invest in companies which can get to space faster and, are able to, if they're able to make 2 attempts, they're able to survive, they're able to get something out of that, then they deserve the 3rd round and the 3rd attempt. Honestly, if they both fail, they probably don't deserve the 3rd one. So that was actually our thesis, because end of the day, we are managing somebody else's money. My LP, my investor is my, my customer is my LP. In that sense, we chose to invest in not asteroid mining, not, those kind of businesses, but something, imaging is an existing business, propulsion is a more still understandable business, RF intelligence, is still an understandable business. We chose to stay in those domains where we felt at least demand is not a problem. As long as you can, generate 10x value, demand is not a problem statement, at least in those.
No, thanks, Manish. I think that's a very interesting statement, and I'm not sure if that reflects the mentality of the majority of the VCs in country, because if you look at the one that went to IPO, right? If somebody had said 10 years ago that you're going to land a 70-story building on a catcher, on a toothpick kind of thing, who would have ever believed, right? And those are the successes that we're now really seeing, and perhaps that was too sciencey at that particular point in time. So with that background, if I may ask you, Commander Navneet, has things changed in terms of the VC appetite to look at how the space sector is being addressed in terms of the kind of things that you're willing to invest, or thanks to some of these transitions, are we becoming more and more, how do I say, risk appetite has increased?
Yeah, so definitely the risk appetite has increased, and actually I won't say risk appetite, we don't have a choice. That's what has happened. Because with the West Asia crisis, suddenly what has happened is the market has opened up and you realize you do not have a choice but to own your own infrastructure. You can't be depending on someone else. So that realization actually makes you realize that you don't have any other choice but to take a risk. Not taking a risk is the biggest risk today. And then the government policies are also actually supported quite a bit. Just for statistics, before the RDIF fund was announced, we had probably 30, 40 funds which said they were doing deep tech. After that, there are more than 200 applications which have been received. So a deep tech interest has suddenly changed because, one, the demand is there. We need to own our own things. And talent-wise, we never lack talent. That's what my belief is, and that's what I see every day. We have thousands of good founders, amazing kids who are building amazing stuff. It's the money which was lacking, which is coming in. And strategically, what has happened across the world that has made us realize that self-reliance is the only way forward. So that has changed for us now. And that's where the money comes in, the demand happens, everything. Even you see the government, today defense is, a lot of defense officers are here today.
Perfect.
In fact, we couldn't have thought about it.
No, absolutely. And I see a lot of people sitting upright thanks to their years of training in the audience as well. Raj, if I may come to you, he talked about talent. He also talked about availability of capital increasing. But there is a widespread, let's keep the VC aside for a moment. If you look at the overall ecosystem, there is a widespread belief in the market that the big capital is always coming from outside the country, right? And there is no dearth of big capital investors in country. We have so many big industry houses, right? And is there anything systemically that has to be addressed so that Indian big capital starts flowing into space? Because space is now a strategic sector that Honorable Prime Minister has inaugurated in multiple startups, and he keeps speaking, and the industry, in Space Industry Connect was a runaway Broadway success, if I may use the word. But what is preventing big capital from India to come into the space sector in India? Is there any thoughts around it?
Sure. No, there's a good side to it, bad side to it. The bad part is the amount of money that is flowing in is not enough. But the good side is it has started. Are you able to hear me? Okay. But the good and the positive side is there's a lot more money coming in, and not just from one odd places, one odd investors, but a large number of family offices who now understand, thanks to the media coverage, thanks to what now SpaceX has done, and so on and so forth. A lot more interest is there, and we being a fund which is 100% Indian today, with institutional support as well, we stand like a testimony for this statement. What more can be done? I think some actions that have been taken recently, the RDI fund itself, that's a great signal. PM tweeting about companies doing well when they're at a very early stage. That's a signal. People say it's a political statement. I think it's a demand signal. That boys go ahead and work, boys and girls go ahead and do what you want to do. We are behind you. What that also does is it creates some sort of a signal to the government departments to look at, putting the commercial scaffoldings together to be able to create a purchase pathway for what you rightly said, for a lot of things that have never been done before. So there's no purchase pathways in the system. So that needs to be created. So to me, the biggest thing that can be done is not about is not money being given to these companies. If you can create a structured way of signaling and backing up that signal with real demand, which is POs to these companies. Number one. Number two, aggregate. This is efficiency issue. You talk about political differences between state and the center. States buying mechanisms are different, and so on and so forth. Right now, fortunately, and I'm not making a political statement here, you have large number of states that have BJP-ruled governments. It will never be easier than today to be able to aggregate the state demand and the central demand. You don't need subsidies, fund will come, money will come. RDI could be a very small part of the fund that is needed. It's a good trigger, but creating demand is the biggest signal for other venture capitalists to invest. So I'll stop at that. Happy to clarify.
No, Raj, I think it's a very interesting statement you make, because in multiple conversations, in similar conversations, we always hear that there are multiple suboptimal silos being built within the country and across states, right? And the road by in-space to create common testing facilities across multiple states is a good pathway. Perhaps what you are saying, Raj, is that those CTFs, the type of capacity, the type of testing, etc., should not be perhaps duplicated within a geographic cluster, right? And then, you are able to make sure that there is a widespread end-to-end capability to address the demand that is coming in. And a lot of activities have already gone in.
That's true. InSpace has been a huge support and again, a huge signal to the space industry and the young startups who would otherwise take like months and months chasing a DPSU to get some rights, to get some testing facilities in their favor. Sometimes they'll have to go abroad. So InSpace has done an amazing, I would say phenomenal work. Now the Antariksh fund that they've launched, there are 3 companies that are already out with their funding.
One was announced, 2 more will come up.
Yeah. That again, will crowd in a lot of private capital. And I know for sure, when companies say that, I have 100 crore round, I have 60 crores or 50 crores, likely to come from Antariksh, people look at them very differently. Because they don't see this as money coming, they see as government support coming. And government support will not stop at giving money, it will go ahead and try to make that money run fast. And hence, they'll do all the right things to create demand out for these companies.
Perfect. Last question of round 1 to Chetan, if I may ask. We heard a lot of these people speaking what has happened well, right? Like we ask in interviews, what do you think we should stop doing so that this sector will really grow?
We should stop doing.
Yeah.
I think space is just getting started. We should not stop at all.
Fantastic, thank you.
I think to answer a few things, and I think the starting point is why we are here is somewhere that as VCs or as investors, I don't think we've worked on a thesis for space. So what has happened is that it's become a opportunistic kind of view now, But for space, given that it takes so long, it takes global companies to also take so much time. We need to build that thesis wherein you say, okay, I'm taking a bet on this sector, and then kind of go all in to say, okay, what are the things that I can do there? So I think one is having a thesis. Second is you need to have a global lens when you're investing in space, because you can't really compete or build only for India. I think the whole strategic angle is obviously now very important given whatever we are seeing geopolitically. But again, having a global lens, so for example, launch is something where India has a unique advantage with ISRO, and now of course with companies like Skyroot and others launching. But again, what else? What else can we do, and how we can compete globally? So therefore, founders need to also think that, okay, what is the commercial use case, and they need to drive that with investors as well. Because at the end of the day, if dollars have to flow, then a commercial case has to be there. So I think somewhere, if we've looked at India, we've always looked at ISRO from a large mission point of view. We've never looked at it from a commercial point of view. So therefore, but if you see the signal that if we are going to a mission to moon tomorrow, business infra will also move to moon, and you can create a space economy there. So I think as funds, as investors, we need to start building thesis and start kind of backing companies very early on, because it takes 3-4 years before actually you see some proof points.
Thanks, Chetan. I think we have time for one more round to go round robin, and perhaps we can make it a little more crisper. My first question to Raghu sir, space is, when you look at a space company, right, are you also looking at adjacencies on where this investment can deliver value, or is it purely on the merit of the space case itself?
I think pure space plays are harder because it takes longer time horizon this thing. So we sort of look at a dual use cases. If there is something can be used in space as well as in terrestrially, because that is something can be done. For example, like in space manufacturing. So you can sort of manufacture in space, but there is application, massive application in the ground. That's a growth market. I think there are other companies like Earth observation or the communication. Those are also this is a consumer here, so there is a good market. So I sort of encourage dual use or multiple use use cases. So that's how I see.
No, fantastic, sir. I think we are also seeing a lot of that globally as well in terms of, for example, if I'm very good in, say, some of the propulsion systems, then how can that be used in automotive? Or if I'm very good in some of the imaging systems, can I use that in adjacent industries like glass manufacturing and other things? So there is a bunch of adjacencies that is really, really coming out in the market. And thank you for that. And dual use as in defense as well. So Sameer, if I may ask you the next question, how do you separate signal from noise when you're looking at investing? Specifically since you're talking about space tech.
Yeah, so there's a lot of noise all across, but yes, I was just talking to Chetan and was telling him Om is the universal sound, and it filters out the entire noise, at least for us Indians. So yes, I think that's where the VC things lies, and I like to give a very small example here. Going back, and that is what we were talking, my biggest regret, right? So my biggest regret was not investing in Agnicool, but HDFC did. And I think they were able to, when I spoke to them, they were able to actually figure out a very simple framework which cut down the noise and kept the focus alive, which was establishing the exact revenue and the cash flows which will deliver year on year, right? And I guess that kind of clarity, especially with banks coming in, like HDFC and so on and so forth, not only enlarges the capital pool, but it also sets frameworks in terms of cutting down on the noise and figuring out what exactly matters and sticking to that.
And then thanks Sameer for that. In fact, what you regret not doing, thanks for being candid here. And then Manish, if I may ask you a slightly different question. See, in early stages of a market, specifically in some of the deep tech, and since you said you want to talk about deep tech and less on space, many times the market looks like a bunch of startup ecosystems or a bunch of startups and creating an ecosystem trying to drive technology forward, right? And we heard a lot about demand and other things coming up. From your vantage point as a VC, where do you see this transition from an economy where it is a bunch of startups trying to do certain things to a completely demand-driven market economy?
So it's a very heavily loaded question. I don't know if I understood this right, but how early we are trying to come in, and most of us. So we do a growth strategy also. So by the time, let's say Pixel has done Series C or a Bellatrix has done Series B, there's a lot more proof points, and it's easier to invest in these companies. But a lot of these times when you're coming in, you're pre-product, pre-revenue, pre-technology, pre-launch, pre-everything. You're essentially investing in the team. And like sir said earlier, it's a team you're investing in. You're hoping for and there is a promise of an IP. There is no IP. There is a hope for an IP. There is a promise of an IP. And I think that's what we look at least early stages, because it's very hard to see these Excel sheets and these economies of scale. These are works of fiction. I can sit down and create a Excel sheet which talks about $1 million or $1 billion revenues, and I can create a cash flow statement working out of that. So that's
maybe probably do it better.
Possibly, yeah. So for us, it's team what matters, and what market, what problem statement you're trying to solve is what matters. I think most startups, lesser in space, broadly in deep tech more, but a company is unrecognizable in 3 to 4 years. What you start off doing when you say, I want to do this, and that these are my Excel, these are my numbers, this is where the rubber hits the road, versus what you look at this company after 3 years, 4 years, the face of the company changes significantly. The revenues coming from things you have never imagined. Pixel today earns a lot of revenue from manufacturing, which actually, when I looked at my notes in 2019, there was no mention of manufacturing for others there, right? So I think you invest in people, good people trying to do good things, and they will find way. Economics will work out, and there is enough space in space for everybody, right? Like I think top 10, 15 countries in the world own 99% of satellites today. The remaining 150 odd countries today have probably remaining 1%. So there is enough headroom to grow for everybody, and we are not even talking about very niche technologies like rockets or RF or even just imaging. There is a huge need.
So you said, and thanks, I think you said when Pixel started, they didn't talk about manufacturing. Now they're actually talking of tying up with Sreeram for putting a data center. I think the initial forms that they filled up and the presentations they made and where they are look very, very different.
No, so I remember when the Pixel founders were in 4th year in college at Bitplani, when we looked at them, and their deck talked about asteroid mining. And, in 2019 they were talking about asteroid mining, and you don't believe that, you don't believe everything what's written on a deck, but you hope founders will get somewhere.
Perfect. I think a lot of them grow organically and then outgrow their initial ambitions.
They will figure out, right? Yeah. So people who started companies in 2015, 16, 17, 18 time frame, 19 time frame, before space was mainstream, before space was sexy, before in-space was there, before the policy was there, the kind of resilience those people had, they figured out things. They will figure out things.
Sure, thank you. Then Commander Navneet, I think I'll come to you on a slightly different tangent. We talked about commercial so far. You have the distinction of having served for the armed forces, apart from Air Marshal Khot, but from a space tech perspective and as a VC, where do you see companies specifically focusing on the defense side versus the non-defense side? Or do you see the market on the other side is bigger? Where do you see, and how do you see this market in India growing?
See, I have a firm belief that the cutting edge tech generally starts with defense. And you can go back in the technology, and that there's a solid reason behind it. Because defense is one place where you can give 10 times the cost for a small advantage over your adversary. Right? In India, we haven't done defense. Defense tech was a taboo since I think both of us started nearly the similar time. There was no fund which was looking for defense, saying that it's the only one single government market. Right? From there, when I see that there's nothing in defense which can't be used in the civil side. So whatever investments, if you look from our side, Though it looks defense now, but they all have a huge market on the civil side. The civil market gives you a scale, but to build the tech, the money, the returns which you need initially to sustain can come from the government. Especially like when we are talking about space, we are talking about analytics, like geospatial analytics. You have the, what you can say, the satellites going up. But the data is required now, the intelligence is required now. All across the wars which we have seen or the conflicts we have seen, data streams have been very, very important. We are talking about engines, like we invested in technologies which are cutting edge in the world. I think we are the second or third country in the world which we have now the kind of rocket engines they are building. Now those rocket engines, if you see only as a rocket engine, yes, there's a space requirement. But the same rocket engines can also be used on missiles and other projectiles.
Perfect. I think, Ananthasayanam, you made a very interesting statement of distinction. You talked about upstream, the rockets, as well as the downstream, the purpose for which you put an object on the sky, right? So my question to Raj is that, if you had to look at that distinction, do you see more and more interest? Which side do you see more and more interest coming in country? Because India's basic strength is in data analytics, AI, ML, algorithms, foundational models, etc. Whereas the other side, launch would mean a lot more deep tech and a lot more research. So do you see a market shift in either direction happening?
Eventually, yes. Right now, and it's a very natural progression. Rockets and spaceships and satellites, they excite people. They're sexy. But if you see the overall value chain and if you project it to the next 5-7 years, most of the value will eventually be coming from downstream services. You can launch a rocket with government's money or private sector's money. You can launch a satellite, but what do you do? I mean, how will you sustain after that? So downstream activities will eventually attract more and more dollars, will attract more and more attention. One reason, and this is something specific to MGF Kavachh, because we entered only a couple of years back as a fund, launch and vehicles are important, but they became very expensive very fast in this market. And hence we said we'll focus largely on downstream, but we'll take some selective bets which are relatively secure in terms of being in supply chain of upstream or supply chain of in space, which was our call, because we didn't enter Agnikul or Skyroot in 2019, which was the time to enter if you wanted to be really, really rich out of one single investment. So to cut the long story short, long-term value will find its, downstream will have proportionately larger value, but that is not the case today. But this is a natural progression. So upstream has more value, but long-term it will shift towards downstream.
I think, yeah.
I'll just add on one more thing. Like when we are talking about upstream and downstream, if you don't own your upstream, you will have a problem in the future. Like today, the way it has, the geopolitics has shifted. Think about it, if you have a conflict like this in future and you don't own your thing. So whatever we are talking about downstream, whatever other economy we are talking about, the economy and the security establishment has to work in tandem. If it doesn't, one can't exist without the other.
No, perfect. I think some examples that we saw was the US government putting a moratorium on Maxar not covering the Ukraine conflicted area. And none of us could get any images. But before that in Sindhur, if you saw some of the Balakot as well, Sindhur, I think some of the private companies were the ones who really put out the images and then started telling the truth, and that became quite a Twitter sensation, if I remember right. So my question to you, Chetan, and before you go into one last rapid round, one sentence answer questions, right? Chetan is, you operate out of India and abroad as well, right? What do you think are the lessons that we should borrow from abroad in terms of VC for space?
Speed.
That is a much faster rapid response. Thanks.
I think the focus, the speed is something which we need. Having very strong processes. See, today, I mean, we are invested in Skyroot. Skyroot will do a launch, right? But then to go to a launch per month, you need to really build a strong process, around it, and that's something the company is working on. So I think as startups start to build, they should think about speed, reaching from TRL levels, to really achieve commercialization, because that's where even the capital will follow, and then of course delivering on time and plus at the speed so that you can compete globally. I think with whatever we are seeing now and with SpaceX, really becoming, so huge, I think many companies and founders will be focusing on this sector, and suddenly it's become a hot sector. So as founders who are building today, they have to really solve for speed, because that is what will, separate them. But with the efficiency, cost parameters, frugal innovation, all of that.
Speed for first mover advantage, speed for technology obsolescence, speed for realizing revenue. Thank you so much, Chetan. Quick rapid round, one sentence answer, if I may. Yeah? So start with you, Manish. If there is one advice you have to give to a startup founder who is approaching you, so that you may open your purse to him, one sentence advice, what it would be?
So talk less about the deep techiness of the problem statement. It will shine on its own. Focus on the problem statement from a customer's perspective, what it will deliver. A lot of founders started deep tech companies because of the love of technology. Business is not their first thought. Talking to vendors, customers is not what the first thought. They think technology first. Technology will shine on its own. Focus on the what it solves for the customer.
Thank you. Sameer?
Building a good team and being resilient, right? Money would not immediately flow. They'll have to possibly bootstrap and go along the way. And there'll be dark days as well. But the light will shine eventually, is what I would say.
Raghu?
I think both technology and market, I think both have to be, both have to basically go hand in hand.
Perfect. So I'll change the question a little bit when I go this side, right? What has changed in the startups when you started many years ago versus the new ones that are pitching to you now?
They have a clarity of thought, most of them.
Got it. Okay.
And a plan about how they want to go, achieve it.
Is it a signal of market maturity?
Yes, it's a signal that we have been in this market for last 10 years. The startups have started growing. There's a new crop which is coming up, learning from the past. There are startups which are coming at the mature stage, so they are also, what you can say, mentoring the young ones. So there's a lot of clarity coming in from there, but yes, of course, there's noise.
Sure. Raj?
Yeah, particularly for the space sectors, two words. One is audacity, is dramatically increasing by every passing year. And second, most space startups, and naturally so, start off on day zero believing that they have the world as a market. And if they don't do it, they'll not survive. But I'm seeing that happening virtually in every deck.
A fantastic change of mindset from, world as an oyster was never going to become kind of conversation. Thank you. Chip?
I think overall, the whole entrepreneurship spirit is what we are seeing. Today, founders, for them, entrepreneurship is becoming a first career choice, which was not the case maybe 5-7 years back, right? People wanted to join consulting firms or big banks and all of that. So I think that entrepreneurship spirit is something which is, great to see, and, love to kind of, work with these bold founders, having big goals, big dreams, and, and also somewhere how these founders can make and take India global, right? I think that's the key.
A lot of changes, winds of change we're already seeing, because a lot of folks graduating from premier education institutes are now becoming entrepreneurs rather than wanting to join a Big Four or a McKinsey, BCG, whatever it is. So thank you so much, panel. I think it's been a wonderful conversation, and I hope there are enough lessons for people in the industry as well as people wannabe entrepreneurs and students. And I see a couple of folks wanting to ask questions. Perhaps we can have time for 2 questions before I hand over to, yeah.
Thank you for the wonderful panel. So my question is to Air Marshal Khot, directly the chair. You've been the DG DSA. No, so it's to you. It's not to you guys, because it's end user related. So I think you can only do justice to the question I'm going to ask you. So the question is that the funding models, I'm talking the government funding. You have the NRF and R&D and R&D and a whole lot of government funds coming, right? So you have seen IDEX, you have seen MAKE, right? That's what the question is to you, only not to these guys. So is there a need for a review of the funding models as far as the government funds are concerned? I think I firmly believe, I've already given my recommendations to all the service headquarters, including headquarter ideas 3 days back. So do you really feel that we need to have a TRL-based, technological readiness level funding model? IDEX is fine. IDEX Prime, Aditi, 25 crores, but matching contribution 25 crores. And some of the investors, they want to just have a quick buck and just do something and get out of it before an IPO comes. Because if you have a matching contribution 25 crores, then you have to dilute equity, which a lot of startup founders don't want. Yeah. So I think, do you really think we have done studies of how DARPA is done and other things. So what are your views on a technology readiness level funding model as to the government funds is concerned, which has got no matching contribution? Thank you.
Okay. Government funding models are evolving. IDEX is evolving. We set into motion something which we did not quite know how it would unfold when we started. You've been part of the journey, I've been part of the journey. There are, I don't even know the total number at the moment, but I know it exceeds 1,200 IDEX challenges that are being worked upon. We are talking about the R&D part of technology development here, where challenges are put out to the industry bids for them, they compete for it, get those particular things, and then the government funds them. Matching contributions was something that was thought of, to my mind, as a kind of a risk mitigation thing. And because the government was going to spend public money on something that was unknown, right? So as a first step, I think that was a good model. Whether we can go into models which do not have a matching contribution thing, the RDI fund currently is exactly that. It doesn't ask for that, right? 1 lakh crores. In addition to that, there was the older ANRF fund, no matching contributions. In addition to that, there are at least 8 ministries and several state governments which have got schemes which are mostly, grant in aid to kickstart things. So there is already a whole pipeline of government funds which are working in this area. Can we refine? Absolutely. Are we learning? Yes. Do I believe that we are going to continue to refine as we go along and be alive to what changes are happening around us and what's needed and keep changing that? Yes, I believe that's going to be so.
Commander Navneet, can we have your closing thoughts before we close?
Yeah, sir, in my view, I was with TDB, so I've seen that in a different set. You need private capital to come in because government funding can get you only R&D. No, I'm saying where the 50% comes in, and I'm not saying 50% should be there, number can be lesser, like TDB has come with a model now, 70% they can fund and 30% come. The private market, what it gets is the focus of the product. I think what the government can get in is about the order book which can come in associated if you build something. So that order book is large, people are interested. But the private capital gets a certain discipline which the government funding may not be able to achieve. Government funding will have a lot of regulations, rules which may probably slow you down. Private funding is, if it comes in, it's going to drive you, sometimes in a positive way and sometimes not in so positive way. But then private funding has to be a part of it. But yes, what government can do is make the pipeline to get orders much easier. That is where it can really move now.
Thank you. I've had the opportunity to learn a lot from this panel and the notes here. I think what shines through very clearly is that some of the principal impediments to unlocking capital in a larger way has to do with the market visibility and demand visibility. And that's something that all the potential segments of the market can do something about. Government is still the anchor customer, still the biggest potential market for the foreseeable future, but also industry and also probably the global markets. I think there is also a need for a little more introspection on risk mitigation strategies. Can the government, for example, step in with kind of first loss capital to do a little bit of mitigation there? Banks and NBFCs, can there be a debt guarantee kind of a thing? And insurance. So insurance, we're just starting to talk about, but risk mitigation, I think, is very important. Another factor that people have to take into consideration when we read the statistics about capital is that the rate of capital absorption by the young industry is variable. You may take on $50 million to actually utilize that for what you did is going to take you time, and that's something that is slower in the early stages and then gets faster and faster as you scale. So we are now coming to a stage where a lot of the companies are stepping out of their early R&D. They've got a minimum viable product, they've got their protos, they've got their orders, and now need to scale. So this is where the big tickets come in, and the ability to absorb larger, ticket sizes is there. So that's something that needs to be taken into account. Industry as a whole is still somehow considered early stage, the space industry, by private equity. We don't see enough of it. Banks and NBFCs are still working on older patterns. We probably need newer models on how that money can be unlocked for the space sector. I don't think we have got anywhere close to that. Space sector funding, like even valuations and like everything to do with space, is different. And we need different eyes to see it and read it. Earlier templates and earlier benchmarks are not going to serve us. We need new models, new measures to even read and understand the space sector and how it actually, progresses a little better. Information, authentic information and awareness is still a barrier. I run a campaign through InSpace with my small team called the Invest Space campaign. We've done 10 editions so far. And with each edition, we find the VC community warming up to the particular thing. But we also realize how much ignorance there is on the basics of how the space economy even works. What are the revenue models? What are the value chains? How is money even made in space? So there is ignorance on a gross, scale on very basic issues. And that is something everybody, every stakeholder, and the industry federations are very important in that. We all need to put our shoulder to that wheel, right? And get that veil of ignorance out of the way. Something very uplifting that I have experienced since I started on this journey of trying to gather money for the first time in my life. Money that I will not make, but... all of my interactions with the VC community, and this flank on the left is a direct thing. I always thought an extremely intelligent, hard-nosed community which only thinks profits, which is true to an extent, right? That's how it should be. But I also found a very different language, and consistently and repeatedly, which was about we need to do something meaningful, we need to build something enduring, we need to strengthen ourselves strategically. The sovereign strength is important, let's build that. It was there in Home Ventures AGM. It was, Kavachh and there's this example sitting right here. It was there in the Singularity Summit, where the tagline was strategic, sovereignty. So the language is changing, and I see great hope there. There are great opportunities that are there waiting to be tapped, but a lot of effort and a lot of journeys to be done. With that, I think I'll close my remarks. Thank you very much once again, Anil Prakashji, Raju Gambhirji, and all of SIA for the opportunity. And may I call for a round of applause for this splendid panel and our moderator.
Thank you very much to our chair, moderator, and all the panelists for sharing valuable perspectives on investment opportunities and market readiness in the evolving space economy. May I now request everyone present on the stage to kindly come forward for a group photograph. Please give a huge round of applause for our panelists, chair, and kindly the moderator. It's an honor to have you with us today. Ladies and gentlemen, we now move to the third session of the day, Strategic Space Autonomy, Data, Cyber Security and Sovereign Capability. As nations increasingly rely on space infrastructure, ensuring sovereignty, cyber security and technological independence has become more important than ever. This session will examine how nations can strengthen sovereign space capabilities, secure critical data, communications and cyber infrastructure, reduce strategic dependencies, and build trusted partnerships for long-term national resilience. To chair and moderate this important discussion, please welcome Major General Dr. Bipin Bakshi, AVSM, VSM, retired Distinguished Fellow, Center for Land Warfare Studies. We're also honored to have the keynote address by Dr. Sumit Chakravarti, Professor, Kennesaw State University, USA. And we also warmly welcome our distinguished speakers, AVM, Dr. Devesh Vatsa, Advisor, DSCI, Mr. Lakshmi Narasimhan Sundarajan, Founder and CEO, Trio Space Security Solutions, Mr. Ashutosh Bahuguna, Scientist, Additional Director, Certain, Mr. Sameer, partner Trilegal. Please give a huge round of applause for all our panelists, chair and moderator, ladies and gentlemen. It's an honor to have you with us today. I kindly request all the dignitaries to be present on the stage. I request everybody to kindly get seated for the session. I request everybody to kindly get seated for the session, and I also request all the dignitaries to kindly come on the stage as the session is about to get started.